Hey, happy coronavirus!
Oh,
happy coronavirus!
Wait, I got a dry cough here. Yes, basking in the ambiance.
Yeah.
How about I fart?
Wow!
You know,
it's a happy day here
This
today.
is a week, though.
A week
of historic.
Like week, like as in, oh my God, I'm so weak. I can't get my a week. Yeah, biggest Dow drop in a goddamn day in a lifetime. But mind you, 15% of the market gone. 15% of what? 6 months ago, nothing. 15% of what? It's disappeared, nothing.
Pricked the balloon.
Some prick.
Someone pricked the balloon.
Bastards.
And the balloon is now 15% smaller by volume.
Well, how low is it going to go?
Did I say the prick smaller by 15% or the balloon?
I think you're referring to the contents, Edward. Let's try to keep this above a G-rated level.
You know what? Words are just symbols of relations to one another. Something like that. Okay.
I was going to say, isn't the line usually a word just an approximation?
This is Nietzsche. Nietzsche said this for F's sakes.
Boy, you tell you've been in the philosopher's parlor.
I went down for the cheap beer.
Nice.
Yeah.
And was it cheap?
Cheap.
You didn't smoke any weed, I see.
No. You can
no.
tell, eh?
I can tell, yeah. I can tell when you've had a couple of nips.
I'm a little more loquacious when I smoke weed.
Well, you're definitely more loquacious. There's no doubt about that. How much further do you think the S&P is going to go?
I think if it can close in between the high and the low today, which would be about down 50, 60, down 40, somewhere in there.
Close between the high and the low. Isn't that what it always does?
No. No, because sometimes it closes right on the low.
Oh.
But what I'm saying is I want to see a candle where we've moved up a sufficient amount. Now, we're going to have several tests because there's been so much damage done, but we need to see some evidence that we're going to close not near... And you know, I can show you.
Ed. What are you saying?
I'll spit it out, but...
So are you saying you smell a bottom?
Can you smell the bottom? Whoa! What have you been eating? Jesus! You know what? You don't want to be smelling the bottom if they've been eating meat. I can tell you right now.
What is it? Better if they've been eating veggies?
Yeah.
Have you ever smelled the bottom of a cow?
You can't smell it.
What do you mean you can't smell it? Oh, boy, coming up on today's show, the man says. Anyways, Roger Scott is going to join us from WealthPress as the head trader. He's got some interesting insight. Charting man Dan joins us briefly all the way from Asheville, North Carolina. Jonathan Sandelman, CEO of AYR Strategies, is going to be here. He's the former president of Bank of America Securities. That's what he did before he founded AYR Strategies. And this is an interesting story. They just reported quite the robust financials. And then Greg Gibson is here. He's the president and CEO of Bonterra Gold. Greg Gibson, most famously, was Eric's main mining guy for many years. Eric's now retired, approaching 70, I think he's 75 years old now, and we're going to have Eric on the show. Did you hear that, Eric? You're going to be on the show. Can we get you on the show? No, he didn't say he's going to be on the show. No, we haven't even asked him, but we're hoping. Our fingers are crossed. We hear he's spilling the beans again. Anyways,
what else is crossed?
What else? Well, let's talk about the cannabis industry because yes, it still does exist. I have got 4 charts here in front of me. I've got 4 charts here in front of me. There we go. I've got the large cap index is now flirting with exactly its all-time low, which occurred back in November, January 2019. We're looking at the small cap index is at 347, which is the lowest point it has ever been. The CSE index has collapsed to below its lowest point ever. And the Midas Letter Venture Cannabis Index is also at its lowest point ever. So basically what we have here is total and utter capitulation in the cannabis sector. Thank you very much. Thanks for coming out. Go smoke a joint. Ta-da.
Does that mean when does the pot cheaper? Is the pot cheaper?
Nope.
Because they obviously have overproduced.
Overproduced. Well, but the problem is the overproduced portion of the global inventory of marijuana is more or less uniformly the shittiest portion, in my opinion. In my opinion. I have to caveat everything with it. It's only my opinion. Can you smell a bottom? I smell a bottom.
A bottom or a lobotomy?
Roger Scott is the head trader of WealthPress. He knows a thing or two about what's going on in the S&P 500. Roger Scott joins me now with WealthPress. Roger, welcome.
Thank you so much, James. Glad to be here.
You bet. Roger, the markets have been really volatile lately. What is driving everything in every direction?
Well, here's the thing, and this is a great question, and I'm glad we're talking about this issue because this is what everybody wants to hear about. You know, everyone's going to tell you that the coronavirus is driving this downside correction, but I don't agree. I think the coronavirus is the catalyst that triggered it, but I think the market was way, way, way overdue for this. Momentum levels have been at the highest levels we've seen in 5 years. You're talking about a market that's been stretched out, and has not had the ability for that rubber band to snap back. So what you're seeing right now is something that needed to happen for months already, and it's finally happening. To me, this is a blessing in disguise. And I honestly think the coronavirus is maybe a trigger to this, but not the continuous underlying cause of this. I think markets are just cooling off from being grossly overbought.
Wow, interesting. So the markets, obviously are in need of a corrective phase anyways. The coronavirus being the catalyst, that's great. So in your opinion then, the underlying economic data, how much of a factor is that in the bigger picture?
Another very good question. Very little right now. And I'll tell you why. There's a fundamental reason for all of this. The target growth for the GDP, which came out at 8:30 Eastern Time this morning, has been a little bit higher than 2%. Economists will 2.1%, but in reality, it's 2% or better. And it came out right on target at 2.1%. Unemployment's at a 55-year low. This whole downside, durable good orders were a little bit soft, but everything else was right on target or better than expected. Even earnings on the retail sector came out better than expected. So in my opinion, we are not even close to having the Fed make a move to lower rates. Here's what I believe is going on. I believe the market is going to capitulate in the next day or two. I think we're going to bottom near the 200-day moving average. But in terms of the economy, things are solid. Things couldn't be better than what they are right now, honestly. And here's the thing. If the Fed sees that things are really getting out of whack, we already know what they're going to do. The question now that everybody's battling, it's not really the extent of the coronavirus now or how many people are going to die. More or less, it is becoming under control. It's the impact that it'll have on the world in the first quarter of 2020's earnings. That's the question. From what I understand, and we really don't know what's going on in China, but from what I understand, they're working right now at 10% capacity. Mike came on record and said we're expecting worse numbers because of this. Tesla, you got a lot of car companies. So the question is what impact it'll have on the future. As far as right now, things are fairly steady.
Mm-hmm. So to what extent do you think that the downdraft in the major markets is in fact the market pricing in the poor first quarter in anticipation looking forward?
And that's exactly what I think the market's doing. Look, if you look back about 3 weeks to a month, you'll see that Goldman Sachs, Morgan Stanley, even Bloomberg, very conservative, very in terms of earnings, they all said this is going to be the first quarter of 2020, which is, the second calendar quarter, but you know how earnings work. Everything is one quarter back. So everybody anticipated, all the big guys anticipated the first quarter of double-digit growth. And analysts have not started beating those numbers down like they did the fourth quarter of 2019, which started out pretty high, and then by the time earnings came down, those expectations fell. We have not seen that yet, and so what I'm trying to say is there's some leeway there for the numbers to come off a little bit. And if they do, we know exactly what's going to happen. President Trump is going to start pressuring the Fed to lower rates, and it's going to reflect, look, the truth is, if this coronavirus is going to have an impact on the economy, it's going to reflect in the GDP. There's just no two ways about it. We're going to see a lower GDP, and if that happens, the Fed is going to be forced to take action. Right now, President Trump can't really go to them and say, you're not doing your job. Why? Because GDP is at 2.1%. What is he going to say? It's not growing fast enough for me? Anything above 2% is above expectations. So the question is now whether or not the market is fully assimilating what the coronavirus will do. And from history will tell us the market tends to panic and go overboard. It happens every time. Look, this morning, last night's put-to-call ratio was 133. 133. It hasn't gone to 133 in a long time. That means puts are overpowering the calls by a huge margin. And usually when that happens, the market is not being reactive. The market is being scared. VIX right now is above 30. We are in scared mode. The logic is not driving this market. Fear is driving this market. And whenever that happens, that usually doesn't last.
Sure. Okay, I'd like to dwell for a moment, if I could, on the put-to-call ratio, just because my audience isn't necessarily that financially literate to understand what 133 means in the put-to-call ratio. Is that 1 to 33, meaning that for every call there's 33 puts?
Yes, exactly. Here's how I look at let me give you a very simple analogy to understand. Typically, 95% of the time, the put-to-call ratio is very random. It's used, but sometimes that rubber band, and I like to use the rubber band as an example because I think it fits very well. Sometimes that rubber band stretches out to a point where the only thing left to do is for it to snap back. And when you see the put-to-call ratio at 0.70 or lower, that means the markets are very complacent. Greed is driving the market. Too many calls versus puts are driving the market. Then when the market goes the other way, the rubber band snaps the other way, and fear is driving the market, you want to see a put-to-call ratio above 1.15 or higher. Right now it's at 1.33, which means puts are really driving this market. And whenever that happens, whenever that fear level gets out of whack, that rubber band stretches out, it tends to snap back. So the ratio is above 1. And whenever it goes a little bit higher than 1.15, 1.20, watch out. It's going to snap back the other way. Or gets below 70, 0.70, it snaps back the other way. And right now, it's at 133, and I believe we've only had it higher one time in the last 5 years. But understand, last time we spoke, momentum levels were at 5-year highs. Forget coronavirus. It was time for things to move down. It was just a matter of days. Everybody in my boot camp sessions where I meet every day with my traders, nobody's surprised at this. We saw this coming miles away. It was just inevitable, and it was a matter of time. And it would have been coronavirus. It would have been international trade. Something would have started this, and it just happened to be the coronavirus. But again, to me, it was just it's just a trigger for something happening. What we're seeing now was long overdue.
Sure. Okay, so then what is the intelligent strategy at this point for traders?
The intelligent strategy is to stay on the sidelines. The S&P right now is sitting right at the 200-day moving average. Here's what I say. Let it bottom out and start moving higher and wait for the S&P. There's strong support at the 302 level on the S&P 500, or if you're looking at the S&P 500 index, it's 3,020. Right around 3,000, there's major support. If we can trade higher above that level, I want to see the market trade above the 50-day moving average and close above moving average for 2 days in a row before I go long. Or conversely, I want to see it close for 5 days below the 200-day moving average for me to call this market a bear market. And I don't know what's going to happen. I think we're going to snap back up, and I think buying pressure is going to move back in. One of the telltale signs, one of the biggest telltale signs is when the market opens, when we're in a bearish correction, and the markets open higher. Whenever it opens higher, it tends to go lower during the day. Right now, for the first day, the market is lower. So, and it hit the 200-day moving average. And volatility is off the charts. So we may be very, very close to a capitulation. Also, gold did not take out the high from last week, from earlier this week, excuse me. It's Thursday already. So yeah, gold did not take out the previous high. That flight to quality is not happening. So I'm seeing the market getting fairly close to its downside goal at this point.
Okay, Roger. Well, that's a great update. I really appreciate the input today. Thanks very much.
Thank you very much. I appreciate your time, and I'll see you next time.
Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. So the VIX is up at 46 right now, and the world is drunk, and I want to get off. No.
Yeah.
So
it's
you smell
dicey.
the bottom?
The bottom I smell.
You smell the bottom?
Well, I don't smell the bottom. I
The
smell
whole market
something.
is sucking hind tit right now. There's nothing going up except bleach factories. Bleach factories. Did you see the price of gold today?
I think it was down. The last time I looked, it was down $62.
$62, man.
Jesus.
Jesus. Now, this is the thing. If everything's going off the rails here, why is gold, sucking hind tit?
Okay. Let's go back to 2008, 2009.
Oh, here we go.
And 2008, 2009 was, people, the financial world blinked, right? Mm-hmm. You had Lehman going down, Bear Stearns going down, and if you look, and it's interesting, gold was nailed at that point as well. And then when the world realized that nothing was going to happen for a couple of years, gold started this monumental run and peaked in 2011. So maybe we got the same kind of thing where gold has to get smoked first, and then when the world can't get going, then gold takes off. That's what I'm saying. Talking to you.
Okay. That's a remarkably cogent explanation.
You know what? I should maybe write an article.
Can you repeat that again? Oh, yeah, that's right. Where's your article?
Yeah, well,
we're going to get an article.
I didn't say which Tuesday.
Well, that's a good point. That's a good point. So the PDAC is here next week.
Well, apparently they were about to cancel it.
They're about to cancel it?
Yeah.
What do you mean? Where'd you hear that?
Well, a little birdie.
Well, I wrote an article this week saying, asking the question, I was not advocating for the cancellation per se, was I? I was just saying that I'm certainly not going to be attending any 25,000 person conference whose slogan is shake hands with the world. And then they promote it with over 25,000 delegates from 138 countries. Shake hands with the world. It's like any other year that might sound like a great idea, but this year, I don't think so. You know, I've changed my route walking to work so that I don't go near the hospital.
You've changed your route.
I changed my
route.
route.
R-O-O-T?
Yeah.
Or R-U-O-U-T-E?
Yeah.
Change your route.
Yeah.
What kind of route have you got?
I've got a big route. Solid root, anchored to the ground.
Is that why they nickname you Cucumber?
That's
I don't know. You know, stop it.
They called me Billy Bat.
Jesus.
Anyways, so what do you think? Let's just take a little small wager here on what do you think the delegate count is going to be on Friday next week when this PDAC is over. Do you think they're going to get to 25,000, or do you think it's going to be a serious subset of that?
I don't know.
Wow.
They're talking 20,000. The last thing I read was 20,000.
Well, 20,000. Okay, well, it was 25,000.
I'm going to say, no, I know some people that have already canceled.
Really?
Yeah. Because
of the coronavirus?
No.
Then why did they cancel?
Because they have infections.
Okay, right.
No, I think, you know what? Wouldn't it be just fitting, though, if we just all, expired?
Well,
what would that do to the deficit?
I think the planet would not be hurt by a 2% reduction in population.
Culling?
A culling of the herd.
Culling
the herd.
Culling.
Hello, herd, come over here. Culling the herd.
What was that song about in Britain? It was London London calling.
London calling. Yes, I was there too. That's what was declared. London calling. The Clash.
Yeah. Is that the Clash?
That was the Clash,
or
man.
or the Rash.
London calling.
The clap.
Yeah.
He's calling it the clap.
The clap. Anyways, let's have a quick shout out for the people who loyally have tuned in once again to watch us and listen to our mindless banter. Ivan Black. Aloha, Ivan Black.
Aloha.
Aloha.
Hello.
Wesley, never seen you here before, have I? Edvard, I muted it. There we go. Or Okanagan Organics. Geez, I wonder who that was. Anyways, where's our weed? Where's our weed, Okanagan? You know who we're talking about. We're expecting weed from the Okanagan. We're expecting some properly cured weed, and we'll be the judge of that. Anyways, let's see. Mr. Alan Trujillo joins us all the way from Lima, Peru today. Faye Smith is here. Hello, Faye. Mr. Lou 1990, great to see you. And Modern Picasso, it's been a while. Excellent. Starting to feel like we got a real solid crew building here after 2 years of doing this. What do you think, Ed?
Well, you know.
No, I don't. That's why I'm asking.
Come see, come saw.
Come see, come saw. Hey, have you noticed my voice is a little hoarse?
A pony?
More like a root.
You say your horse. Your voice is a little hoarse. Now, for me, a little horse is a pony. So you're saying your voice is a pony.
A little horse is not necessarily a pony. A pony is actually a different species.
Really?
That it's not just a small horse.
Is this like Ride the White Pony? Okay.
Funky Cold Medina. All right. Enough of this nonsense. Charting Man Dan is going to run us through some charts very quickly without
I think
the
weekly trend.
Hey James, thanks for having me. So checking in, we last looked a week ago, and we have dumped significantly since then. Fortunately, I was talking about the bearish position that I was in at that point. I have since covered a little bit too early, but it's still been a good week having that bearish position. We are at a point where we had a aligning of the stars with overextended charts, coronavirus fears, maybe a little bit of pricing in the potential of Bernie Sanders getting the Democratic nominee, and it led to one of the fastest or the fastest sell-off that we have ever seen in terms of speed of this pullback. The volume has been massive. The hourly time frame has been such a clear guide where every single bounce is just an hourly lower high being set, and all you got to do is wait for a loss of the 5-minute uptrend to see that hourly lower high being set, and then have some really nice bearish plays from there. So no sign of a meaningful bounce at this point. The bulls here would have to hold the low of the day and close up near the high of the day to try and see this hourly trend change take place. Until we see an hourly trend change, there is no trust in any of these bounce attempts. We are going to see very significant volume today, probably the highest volume day of the week in SPY. And what we've been saying in the MJ sector is what happens during market weakness. If the S&P 500 is running to all-time highs for months and the MJ sector is going down, what happens when the overall market goes down? Well, this is certainly an extreme version of that, but there's a lot of names that are hitting their multiple year lows in the MJ sector. The US MJ sector appears to be getting hit a little bit harder. Some names like CGC definitely hitting multiple month lows, but they do still have some support to back them up, considering we dumped all the way down to 1381 fairly recently. But a whole slew of new all-time lows, and the last time we had the best dip buying opportunity in the MJ sector was back when the S&P 500 dumped at the end of December. This V-shaped recovery for the S&P 500 resulted in some of the MJ names, the US MJ names resulted in hundreds of % moves, and Canadian MJ definitely benefited as well. So bulls are hoping that this is a reset button to try and get the correlation to begin to favor the bulls again between the S&P 500 and the marijuana sector, but it is certainly bleak out there. Seeing capitulation between holders who have been holding for years. These red bags are finally reaching their breaking point and saying that they want to ditch here and now. So SPY bears in full control, keeping in mind that even when we change the hourly trend for the first time, we're just going to zoom out and look for a daily lower high to be set on any bounce. Cron stood out yesterday for dip buying. Again, it dropped down and hit the lowest price that we've seen in years, but we can see today not a whole lot of follow through daily inside bar. Will there be opportunity on a bounce? Absolutely. But all of these bounces are just going to be looking for daily lower highs to form. And unless you are an experienced trader playing oversold bounces, there is not a lot of reason to be looking to get into the MJ sector as of right now. We can patiently be waiting for a daily trend change or a longer term time frame trend change to indicate any kind of shift in momentum, because right now it is absolute bear city in the market and the marijuana sector as a whole. So we are certainly expecting some market bounces in the near term future, but this is a falling knife scenario, and right now we're just looking at, is this going to be 2018 with a solid bounce opportunity, or is this going to be 2008? And we don't have enough information right now. We did hold monthly support on the S&P 500, and let's just look at SPX, which is the actual S&P 500. That's a double bottom. Our monthly higher low was 2855.94. The low of today, 2855.84. And if we can change the hourly trend off of these levels, it'll give a little bit of a glimmer of hope to the bulls. But again, that hourly trend change is just step number one. I appreciate you having me. We'll see you next time.
Anyways, Ed just asked me a real brilliant question. Am I going to PDAC after that last I'm not going anywhere near a fucking thing, 25,000 delegates.
I'm not afraid.
Do you know how many planes are landing coming from Beijing this weekend at Toronto Pearson Airport?
None.
No, 22. 22 from tonight until the end of the day Sunday. There will be 22 flights from Beijing landing, some by way of Los Angeles, some by way of New York, some by way of other places. But so do you think, how many of those do you think are going to the PDAC? There's one question for you. B, how many of those do you think have been tested for coronavirus but have showed no symptoms nor tested positive, who will test positive eventually as per the, call it 12 to 15% that test negatively then test positively later? People say this might be a pandemic. This is already a pandemic of truly global proportions. All you have to do is a little statistical analysis. If the incubation period is 14 days, in other words, from the day I get infected, that's the day I start infecting. But it's not until 14 days later before I think that I might be sick and I go hole up in a shed. I spend those 14 days talking to two people, then she talks to two people, then they talk to two people. Next thing you know, I think you're going to see this thing blow up like crazy. Like the health minister of Ontario said, she's like, I really don't think there's anything to worry about. We've only got eight confirmed cases so far in Ontario, but it wouldn't hurt to go stock up on groceries and like fill up your pantries for like a solid 2 months worth. It's like, what? Like, it's time to panic. Ed, it's time to panic, damn you. Ah! Are you going to the PDAC?
Yes.
Really? Now, are you going to the PDAC or are you going to some parties that have been caused by the PDAC? Like, are you actually going to set foot in the... See, you're not going to the... You're going to the parties, aren't you?
You know what? I want to bring out... Wow, there's one stock that I bought yesterday.
Really?
Well, I didn't really buy any, but I'm looking at it.
You bought it, and now you want to talk about it on our show.
Yeah.
You bought it, and now you want to tell others about it.
I want to promote it.
That's a promote. That's a promote right there. Let's get that promotional banner running across the screen before Ed starts flapping his gums.
No, I'm not going to say anything.
Well, why not?
But watch? I think you should watch BMK, McDonald Mines.
BMK. Now, quick question. McDonald Mines, symbol BMK.
I know.
Like, hello? What's going on there?
Well,
Are they trying to trick us?
They pulled a big hole yesterday.
Is that like smelling a bottom? That's interesting.
Yeah.
But and what? So what's the big deal? What do you mean pulled a big hole?
They pulled.
How do you know they pulled a big hole?
They announced it
today.
Yesterday.
Yesterday.
The stock traded 16 million or 17 million shares yesterday, and BMK got up to 12.5. Closed at 10.5, got down to 8, 7.5. But you know, we're in a bad time here. But it looks to me,
we're having a good time. I'm having a good time. McDonald Mines drills 735.5 grams per ton gold over 0.96 meters. 411 grams per ton gold over 0.93 meter. Whoa, 411 grams to 735. So there's very thin intercepts.
Right.
But here's the big one, 19.07 meters of 59.2 grams
That's
per
2
ton.
ounces per ton over.
Almost 2 ounces per
and
ton.
it's shallow, very
of
shallow,
gold
very
in the
shallow.
North Pit. So
Anyway.
this is interesting. Let's get Quinton Yari, the CEO, on the show because I'd like to hear about
Okay,
that.
we'll do that probably Monday.
Okay.
Well, we can't do it Monday because we're not going to be on the show.
We're not?
Well, let's do an interview.
Well, why wouldn't we?
Let's do it.
Oh, sure.
You know what?
I'm in.
Maybe for PDAC we should
Do
maybe
some mining stuff.
open the gates. Let the gates flow.
Let the gates flow.
Like Bill Gates
Mixed
flow.
metaphors there. Open the gates, open the dam, open the bridge, open the door, open the barn doors, let the ponies out. I don't know. Anyways, enough of that tomfoolery. So McDonald Mines, you think is a buy? Is that what you're saying? When
Well,
bought
you know
it-
what? If
I'm going to short it. No,
Yeah,
just
yeah.
kidding. No,
Yeah.
actually, but this is a great time to be buying companies like that put out a great hole. Their stock's in the shitter because the whole market's in the downdraft.
Yeah, gold's down 60 bucks
This
today.
is the thing. I mean, if you're going to take a punt, next week is the time to take a punt, or at the close today even. Like if you smell a bottom, I mean, chances
Smell
are
a bottom.
you can smell a
I
bottom.
smell a bottom.
There's a hole in the bottom of the sea. There's a hole in the bottom of the sea. Anyways, my next guest was once the president of Bank of America Securities. And he decided to start a SPAC, Special Purpose Acquisition Corporation. And he raised a whole bunch of money, and then he started buying cannabis companies. And his name is Jonathan Sandelman, and he just reported one hell of a brilliant, well, it was their Q4 plus full year results. And, well, let's let him tell us about it. I'm joined now by Jonathan Sandelman, CEO of AYR Strategies, trading on the CSE under the symbol AYR.A. Jonathan, welcome.
Thank you for having me.
Sure. Jonathan, yesterday you published some very robust financials. Can you give us an overview of your financial statement?
So we met our targets that we put out to the investor community in October, and we're very proud of the numbers that we were able to achieve. And our goal is from day one is to be both EBITDA and cash flow positive. We increased our EBITDA, and we're 3.9 million cash flow in the quarter. And so that really sets us apart from the other MSOs in the industry.
Sure, it sure does. Now, you guys recently started trading. You sort of came to the whole parade late in the game as a publicly traded cannabis company. What was the philosophy? What was the sort of origin of the company?
So we were the first public marijuana company before the RTOs filed and were issued. We issued a cannabis SPAC, so also the first SPAC in the cannabis industry, in December of 2017. So we actually started trading first. We converted from a SPAC to a regular public company on May 24th of 2019.
Okay, was this a SPAC sponsored by Canaccord?
It was sponsored by me. It was called Cannabis Strategy Acquisition Corp.
I see.
They were the writer.
Oh, interesting. Okay, well that's great. A success story in the cannabis space and in the SPAC space. Those are both miracles. Okay, so now...
First time in Canada, actually.
Sure. A critical individual, a more pessimistic individual would point to the $84 million in goodwill on your balance sheet and say that's sort of generous. So how do you defend the $84 million goodwill?
I think it's a technical issue that it would be a bit time consuming now to get into, but I can go through it in detail at another time.
Okay, so just in a summary.
We don't think it's generous. We think it's accurate and disciplined, and it's very easy to explain and defend.
Okay, great. So then how is it that you believe that you became so profitable out of the chute? It sounds to me like you've been operating very much under the radar in that I'd had no idea of what you were up to. So I guess you guys kind of operated in stealth mode, acquiring assets before you actually merged with the SPAC?
So let's go over what the SPAC structure is. So what's a SPAC? It is essentially an acquisition company. And so it raises money to acquire companies. Well, we did several unique things. One is we told the investors in December of 2017, our goal was to acquire the best-in-class assets in the various markets where we would invest. Number two is we'd be EBITDA and cash flow positive day one. And I'm not sure you know much about my background, but for 30 years, I've been in the finance business, both as a financier and an operator. And I understood as the investment community broadened and people who, other than just Canadian investors, traditional investors would start to look at this exciting industry, they would eventually apply very disciplined investment models and measures. And in any other industry, EBITDA and cash flow are extremely important. So we understood that. And as an investor myself, I understood that value. What I never wanted to be is subject to the cyclicality of the capital markets. And so by having EBITDA and cash flow and being able to self-fund my business, because all of our CapEx has been funded out of our cash flow, it would put us in a very strong position vis-a-vis our competition.
You bet. Okay, so then give us just an overview of your history as an investor so that my audience understands that you're not coming to this as a sort of idea guy more as much as you are an execution guy.
So I would start off by saying this. When I decided to invest, because again, I was the sponsor of the SPAC, when I decide to invest either my money or my personal capital in a business, I have to first assess whether I have an edge in that market. And so when I looked at the competitors in that market, I was going, if I invested, to be the only 30-year financial or finance individual in the marketplace, and that would be an edge. So what is my background? I worked at Salomon Brothers. I was a managing director there. I ran several businesses, and ultimately I ran all global equity proprietary trading. I left there to go to Bank of America and started a financial products business, ultimately becoming president of the securities company. And then after 7 years, I opened up Sandelman Partners, which was a $5 billion multi-strategy hedge fund. And then in 2010, I closed that to open up my family office.
Wow, that's quite a background. Okay, so AYR is focused currently mostly on Massachusetts and Nevada. What is the competitive environment like in those states in terms of acquisition of profitable businesses that you can fold into into your portfolio? And then what is your strategy for other states going forward?
So our strategy for acquisitions, which we've articulated in the market, is to continue down the very disciplined path that we've been living over the last 2.5 years. So again, we're in the market actively acquiring or attempting to acquire companies that are best in class in assets, again, that are both EBITDA and cash flow positive. I think at this point, we have the assets we want both in Massachusetts and Nevada, and we are looking to other states that have other excellent operators to continue to grow our footprint. But the one thing I have to tell you is we're not a company in a rush. We're a company that is super disciplined. We take our time, we value and evaluate other companies, and when they're right and consistent with our messaging, we will acquire them.
That sounds like the That sounds like a great strategy, and it's obviously, at this point, in retrospect, been a benefit to be able to sort of be patient and not have to demonstrate performance. One of the biggest mistakes we see in the Canadian large cap space is that these companies rush to demonstrate revenue, and then the revenue was hopelessly disappointing, and now they've overbuilt capacity and they don't have the market to take up the inventory they're capable of generating. So from your perspective, and from obviously coming at it with a very mature sort of strategic vision, do you see Canada as a place where you might be interested in acquiring distressed assets in the near future?
So in my 30 years, I think focus is paramount to successful investing. And so our focus from day one has been solely on the US, and that's because it's a much bigger market. I would say some of the experience the Canadian LPs have had, we have also seen some of the larger MSOs in the US have a very similar experience. We have told the market on our earnings calls for the last year that we had seen a lack of discipline in the marketplace, financial discipline, and we thought this day would come that assets would get less expensive. And so at this point, that's why we're getting more aggressive on M&A, because the market has corrected. We do have the cash flow. We do have the EBITDA. We're an attractive merger partners because we're in very rarefied air in this space, the cannabis space. And at this point, my lawyers have advised me that I'm no longer allowed to talk about our plans for M&A. And we mentioned that on our call yesterday.
Okay, Jonathan, that's a great overview of the financial condition of the company and a great introduction to the company. I wish we had more time. Sounds like I could learn a lot from you, but we have to leave it there. Thank you very much for your time today. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. And what did I mean by that? I don't know. Good question from the audience. Is there any chance that AYR will be uplisted to a major exchange? That comes from Maple Mike. And my bet, and this is my bet, Maple Mike, but not my knowledge, that they will uplist to a U.S. exchange in due course. When that is, certainly not while the market is sucking hind tit as it seems to be. And but anyways, I mean, there's a stock that's holding its share, like it's $11 a share.
Holding its own.
Holding its own.
Holding its own.
Towing the line. Now, let's switch our attention to the wonderful world of pornography. Do you smell the bottom? Oh, that's disgusting. Anyways, this weekend, it's the PDAC. The PDAC is the Prospectors and Developers Convention.
It's the biggest in the world.
It's the largest in the world. And there will be 20 to 25,000 delegates from around the world, from every corner of the planet, from 138 countries. And it all happens at the Toronto Metropolitan Convention Centre, downtown Toronto. Now, this year, the mining market has been a little bit frothy, a little bit of interest, getting a little bit funded here and there, but not quite to the extent you'd want. And even a guy who was Eric Sprott's right-hand man in mining is having a tough time raising money. Well, he's not having a tough time, but everybody else is. He really paints a picture of bleakness for the space. And I'm talking about Greg Gibson, who was formerly Eric Sprott's right-hand mining man. He's here to talk about Bonterra Gold. Greg Gibson joins me now. He's the president and CEO of Bonterra Resources. Greg, welcome.
Thank you. Thank you for having me.
Greg, let's start with an overview. What is Bonterra Resources doing right now, and what's the progress of it?
Well, the progress that we've made over the last 6 months from a market perspective has been very little. From a company perspective, it's been very good. It's been very encouraging as we learn and get a better understanding of the structural geology of the entire belt that we're in. So we've been lacking news because we haven't been drilling. We started drilling a week and a half ago, basically on the ice. But we've been building the Mulroy Underground we've initiated an underground bulk sample and test mining.
Okay.
With the view to bring it into production to take advantage of these gold prices. So there's been a lot of work done that the market hasn't seen. And given the state of the market, I don't think it really matters if you're out there dancing right now.
Well, not right now for sure. Gold has certainly seen a resurgence in both investor demand as well as in interest in the juniors in the last year as a result of a pretty robust price. Currently under pressure due to macroeconomic forces, we'll call them. But in general, the driving force behind the interest in gold has got to be its scarcity. And so in terms of what Bonterra is doing, how does a junior gold company sort of appeal to the investors who are looking to expose themselves to gold?
I don't know how to answer that question. I think we're living in a different world today in the junior mining space. From 5 years ago or back 2009.
Right.
We've gone from, I don't know, 38 or 40 active resource funds to about 15, 16. The big funds that we get the big checks from are looking after their current ownerships. They have to support those companies. So the new money that you would expect to come into the junior sector is just not coming in the way it once did. And we can touch on Eric Sprott for a minute, who, he looks for high grade, and if he sees a high grade hit, he'll take a punt and then he'll swing for the fence on it. Outside of those high-grade hits, outside of the Eric Sprotts of the world, there aren't many people writing checks. Whereas it used to take you 3 days to market Toronto. Now it takes you a morning.
Right.
You go to New York for 2 days. Now you're there for half a day, maybe a day, just because of the distance and the travel times.
Sure.
Where you would go out and you'd launch a financing at 4 o'clock in the afternoon, and within an hour you would have $50 million in your jeans. Those days are gone. So for the junior mining space, I think it's all about consolidation. Single asset juniors have struggled. They'll struggle more now because of the lack of capital. So I think it's a matter of just sticking with your knitting,
right,
focusing on the playbook. And if you can bring other assets together, you can pool funding and focus on one specific asset rather than 6. I think that's the route that the juniors have to take.
I see. Okay, and so there's 3 deposits currently developed at Bonterra, and the main one, Barry, has over 2 million ounces.
No, Gladiator is the biggest resource, 1 million ounces of 9 grams.
Okay, sorry, I was looking at tonnage, not...
In the inferred category. Right. Then you have Barry, that is developed down to the 100-meter level. It's sitting at just over 500,000 ounces. And then you have the Mulroy deposit, which is accessed from the existing Bachelor Lake mine infrastructure. And what we wanted to do there is, I'm very bullish on saying that single asset juniors will always struggle. You're relying on that one pot of gold to always produce the same thing day after day after day, and it doesn't happen. So given the 3 deposits, given a central mill, you can have a pipeline of production that would lead up to 160 to 200,000 ounces over a period of time. And now you've got 3 assets that you can blend from. So every mine will get into a development cycle, so your tonnage is going to go down. You're going to get into pinching and swelling of these shear systems we mine. Your grade is going to go down. So when you have multiple operations coming into one mill, you have the opportunity to blend grades. You have the opportunity for one to pick up the slack when the other one is in a development phase, or you're into that pinching and swelling, or the grade just disappears.
Right.
So that was the strategy. We're still on course for that. We have 3 solid resources on each of them. We have to grow them. We have to infill drill them. The issue we face is the majority of the drilling now at both Gladiator and Barry is we have to drill on the ice. So that campaign has just started. Bad winter, lots of snow, milder temperatures, so we had a late start. But with the bulk sample at Mulroy starting and having the mill right there, we're very confident that Mulroy will go back into an operating state very quickly.
Okay, great. So that was my sort of next question is then what's the timeline until this is a producing mine?
Well, I had a meeting yesterday with a major shareholder who is saying, you know what, pull back the regional exploration drills, focus on Mulroy, get it going. So we've begun our production drilling at Mulroy. We have a bit of time to get the lease in place because it's outside of the existing mining lease. So the bulk sample could very well just carry on into test mining into a production decision. We have an in-house PEA in place that's showing some good economics, and we'll put one out shortly into the public domain. But we're just really trying to get it right, James.
Sure.
I like to say that it's not my first barbecue, but I burnt a few steaks along the way.
Right.
And when you just have to get it right on these small mines.
Sure.
And that's what we're trying to do. And if the market wants to get mad at me or mad at the company because we're not out doing our P.T. Barnum Act, so be it.
Right.
We have a pretty good focus on where we're going with the end game.
Right. You've got close on to 40% of institutional shareholding. That's kind of extraordinary for a junior miner in this market, is it not?
It is. And institutions, Bonterra offers what institutions are looking for. You've got low capex because you already have the mill in place. Now you have to deal with some transportation issues, but you don't have to spend that $400 or $450 million to build a mill. It's already there. You've got cheap capex to get Mulroy and Barry into production. Barry's down 100 meters. Mulroy's got a shaft that goes down to over 1,500 feet.
Right.
So if you can show that you're going to have 50,000 ounces of production from one, 50,000 from another, and 60 or 70 from another, that's very attractive. It's de-risked right off the bat, as compared to having to build power lines, build mills, and infrastructure.
You bet. So I see where, so Barry used to be in another company, and you did a consolidation of these deposits.
Yes, so Metnor Resources owned the Bachelor Lake Mine and Barry, and Gladiator was owned by Bonterra. Bonterra bought Metnor, and the reason for the purchase was, again, the having that asset, the mill, without them having to spend the money on the permitting, a power line, and the cost of a mill. It just made perfect sense, where you're in a 100-kilometer circle that you can start trucking into the one central mill.
Sure. Interesting. Okay, so then the capex required to get to the rest of the way to production, do you have that cash on hand?
No, we don't. We have cash to get Mulroy into the bulk sample and test mining phase, and it will generate some money. We have the cash to get through our 81,000 meters of planned drilling over our winter season.
Sure.
The likelihood of us achieving that 81,000 meters is slim right now, given the late start we had.
Okay.
But we are funded to get everything done we said we were going to get done outside of the development of Gladiator and the mill expansion.
Okay, so then theoretically the success of the bulk sample program should drive some value and give you the ability to access capital at better prices.
You would think so, but when we look at the market today, nobody's writing you a check.
Right.
So you have to pull up your socks, you have to tighten the belt and say, okay, well, what is going to give us value today?
Right.
That exploration drilling out on whoop whoop property isn't. Pull the drills in. Start cutting back and just focus on infill at Gladiator Barry and get Mulroy moving in the direction we want it to.
Based on your long history in the mining space, do you see a future where the interest becomes more broad towards mining again, or do you think that the limited audience that has sort of been shaken out as a result of many bad years is the future of mining?
Well, I think it has to come back. If you look at Northern Ontario and you look at the resource potential in Northern Ontario with a lack of exploration over the past years, the government has to start looking at it and say, you know what, Northern Ontario built Southern Ontario. You know, that's the history of Ontario, mining and forestry. And at some point, someone in government has to say, you know what, we just have to be a little more lenient here. The permitting process has to be streamlined. We have to play a more positive role with our First Nations groups to allow us to explore and extract the mineral wealth that we see in Northern Ontario. The other issue is all of the long holders are gone. So, you know, you've got the Ned Goodmans, the Hugh McCaulays, the Kevin McLeans, the Eric Sprotts. These guys were long gold. So they would buy a position in your company and they wouldn't be looking at the share price every day. Right? The millennial investor is much different, where they're looking for that 10-bagger, that bubble, that boom, 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 and out. Right? That's what we have to deal with today. So there are funds out there that will always have resource funds, but the resource funds are always driven by generalists. And the generalist today wants to own gold. He'll come down and say, here's $200 million. Buy gold. Take Barrick or Newmont, whichever one you like better.
Right.
Okay, and that's where the big money's going.
Sure.
So until we can get into a position where the millennial investor, the flash trader, is going to see the value of gold and holding gold, we're not going to see any big money come back, in my opinion. You know, if that makes any sense. I just don't see these big punters coming in to fill the shoes of the Bay Street titans that built the gold mining sector.
Right. All right. Well, we're going to have to leave it there, Greg. That's a great insight into both Bonterra and the gold mining space. Thank you very much for joining me today.
Thank you for having me.
You
Cheers.
bet. Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. Yeah, there you go. There's a guy who knows a thing or two about mining. Now, we're going to wrap up the last part of our show here with a quick look at all of the cannabis stocks by index. We're going to start with a large cap index here, and you can see that Canopy Growth is down to 24.65 again. Remember, it touched an all-time low, or at least a recent low in the last 2 years of 17 something and change back in December. Is it going to go that low again? Remains to be seen. Certainly making all those pundits who predicted that it was going to $70 again looks foolish for now. Cureleaf down to $6.57, up 7 cents on the day, one of the few gainers. Trulieve Cannabis added 30 cents, but that's after losing a couple of bucks in the last week. So it's quite the bloodbath out there. Charlotte's Web tacked on 93 cents, the other gainer, up 15% on the week. Now, looking at the CSE index, the big winner there this week is Valens Grow, up to $3.10, up 3% on the day, but it's been having one hell of a week. MetaPharm Labs, do you see a consistent theme there? The two biggest extraction-focused Canadian LPs are the winners of the week. Meanwhile, Auxly Cannabis, a new low at 44 cents. Pharmacielo, a new low at $1.90, and Tibbe, 61, N-Wave, on and on. Namaste's down back in the basement again. Wheat MD touching a new low at 45 cents.
45 cents?
45 cents? Is that enough? Does that, see, they lose.
Time to fortify.
They lose Keith Merker, and what happens? Stock goes into the toilet. Damn, we're down another good man. Time to get home, my supper be cold. Damn, that traffic jam. Anyways, quick musical interlude. Cureleaf Holdings. Oh, we already talked about Cureleaf, but what else? Harvest Health and Recreation's just dipped below $3 again. There's one I keep looking for. I was looking at their press release. They got some financing, but some of it comes with a 15% coupon that's due in 1 year. That was only a couple $100,000. It's kind of weird what's happening in the space right now. The thing I liked about AYR Strategies is this is a company that can afford to sit on its hands and do nothing for a while because it has such a judicious approach to the acquisition of assets that they acquire things that can continue to make money. They don't need to run around doing big flashy press releases. Anyway, so I think that AYR Strategies, if it weren't so expensive, would be one of my favorite picks. But we'll see.
Quite a good summary there, James. I must say.
Oh, you were impressed with that, were you, Edward?
A little bit.
Oh well, one of the fellows here on our chat group, Matthew Bradshaw, said he wanted to ask you a ask you a question.
Me?
Yes, he had a question for you. So Matthew,
Okay.
oh, he's asking me now. Any idea why the stock market's falling faster than my left nut?
Yeah,
Boy, I'm just
you know
trying to
what?
picture your left nut falling. Why is the stock market falling faster than your left nut? Because it's almost closing time, and
Look, at the end of the day,
Look.
stock goes up, stocks go down.
and if it's going down, there's more sellers than buyers. And if stock's going down quickly, there's a lot more sellers than buyers.
the world is slowing down very
The
quickly.
world is drunk and I wanna get off. Anyways, we're going to smoke weed and drink beer till the cows come home. That's our show for the week. We're finishing 1 minute early. Why? Because it's PDAC and we can. Love you all. Don't forget to hit that like button. Smash that notification button so you get a little
I'll just say this: if you're looking to smell a bottom here, pick a bottom, pick your bottom, smell it.
Dirty Sanchez.
I think we got a bottom here.
Woo!